Happy Friday, traders. It's 8:01 a.m. Chicago time on October 16th, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Yesterday, strong push led by financials into this morning's option expiry. Several speculations as to why the market basically had a 27 or 28 point swing or so. Um, but in either case, we do have option expiry this morning, and a lot of it expires at 8:30 Central in 28 minutes. The rest expires at the end of the session. GE reports 29 cents versus 26 cents expected, 31.7 billion versus 28.7 billion in revenue. The stock is mostly flat. Shanghai gained 1.6 to bring total gain for the week on that index to 6.5%. 6.5%. China announcing key third quarter growth figures on Monday. So Sunday night U.S. time is probably going to be fairly interesting. Expecting a market reaction to the GDP and industrial production and other numbers. China's premier came out and said that he's stressing deepening reforms and fostering new growth impetus to stabilize the economy. So here, China again uh, doing what it can to stabilize its market while denying that its market's got any problems in the first place. But that's quite typical. The Eurozone September final CPI came in at 0.2% in line year on year at negative 0.1% in line as well. The CPI core came in line at 0.9%. As far as what's ahead today, we have industrial production and capacity utilization in about 12 minutes. Industrial production expecting negative 0.2%. Cap utilization at 77.3%. At 9 o'clock Central, 10 Eastern, we're looking for University of Michigan prelim at expected at 89. This is a mover. And then also at 9 o'clock Central, we're looking for JOLTS job openings, looking for 5.58 million. And then at noon, we have Baker Hughes rig count, no estimate. Later in the afternoon at 3 o'clock Central, we're looking for total net tick flows and net long-term tick flows. Those numbers generally don't move the market. Other than that, there's really nothing on the calendar. There are no speakers looking ahead or anything like that, at least not scheduled. A lot of speakers already came out overnight. Bank of Japan, ECB Jazbek, and BOE speaker Kristen Forbes and ECB speaker Kerr already spoke. Let's take a look at the technical picture here. So yesterday was definitely a tough day for what I do. So overall, the expectation yesterday was for um, responsive selling into the point of control at 88, and then potentially a push down into the double bottom that we've left behind from the day before, and then we were looking for chop for the rest of the day. The second hypo was for an attempt lower, and then for it to push through and get to 2007 as the first and primary target. 2007 being the MC point of control. I'll show you that in a second. And then, of course, beyond 2007, we're looking for the gap zone fill up to 2016 quarter, which happens to be the point of control. So if you look at the point of control from yesterday, it's at 2016 quarter. That was the gap that was open and our target from earlier in the week. So here's how things shaped up. We had a big push up last Thursday of the same nature. Uh, a consolidation in the morning, and then a very strong um, a very strong trend with a pretty good point of control, high volume node near the high. But if I took these two profiles, let me move this out of the way here. If I took these two profiles right here and superimpose them, they pretty much look the same. Both occurring on Thursday, both seem to be long-term high time frame OTF positioning into the weekend. Yes, last week did not have the pleasure of claiming options expiration, but it did occur pretty much the same way. A late test down, like we see here, a late test down. We had like we had the prior Thursday, and then just an unrelenting push up from there. So I see these as very similar templates, and it's just a continuation of what seemed to happen last Thursday. It'll be interesting to see what happens next Thursday if that continues. It looked like a program trade to me because of the way it rotated. Of course, after that, we did have a higher highs expected, and then we came back down, chopped around for a couple of days, and then we sold off and took everything back to the point of control that day. To the point of control of that day. So the point of control of this day is near the high, but the high volume node is down here in the 1997 area. We still have a naked point of control at 88, which was expected to be touched yesterday, and it wasn't. It stopped short by 6 ticks at 89.50. But the market did take that 2007, so let's redraw that profile. So if we encompass everything that's happened until yesterday, you'll see that the 2007 was the most valuable price in the area. So I expected it to pause here and rotate, chop around, and maybe finish higher on the close on Hypo 2, but it just drove right through. So I don't know. It's one of those things where, you know, these types of days occur statistically 18 to 21% of all days. And they're just, for me, at least for my approach, they're tough days to predict. We had an open auction in range opening. We had a very choppy two-way trade. We actually had a neutral day. We broke the IB high. We broke the first hour's high, and we broke the first hour's low. Last Thursday did not do that. Last Thursday was a standard classic trend day setup. But yesterday went neutral before it shot up. So clearly a higher time frame participated. Even when you look at, let's expand this. So the delta was very strong. You can see the delta finished at 53,000, which is very, very strong. Stronger than it was last Thursday. You could see the Thursday delta could only climb to 30,000. Yesterday's was at 53,000. But more than that, heavy volume right here. Very heavy volume. You can see that it's much bigger than the median. The 20-day median is shown in the yellow bars. The yellow bars show us what the 20-day median for that 15-minute bar, because this is a 15-minute chart. It's showing us what it has been versus the actual drawn bar, the green or red bar, which is the actual. So you could see that right after it made that low, right in here, it just woke up and then had really strong volume going into all the way into the close. So this is pretty serious rally. It's got all the footprints of a long-term player taking control on the buy side. So overall, what we're looking for, and again overnight, the European markets, the Asian markets were strong. So overnight, we carried that rally through So we had that the break of the high to extend to relieve some of this pressure here. We broke higher, but overall it's resting overnight with very little indication on bias, except that it's unable to get down into the stem or the thin part of the low volume area. The easier way to see the low volume areas is through a market profile. And here a market profile essentially is a time-based chart. This is where I started actually with profiling, and then after about a year and a half of dissecting market profiling and actually building profiles by hand and predicting a value movement and so on, in real time, I decided that volume profiling is a much better indication of what is more important to those participants. But yesterday, you could see on the market profile that we left a key single print down at 2001, and this whole area is very thin, very thin. So once the market gets down and through this high volume area to here to about 2010, it seems to it seems to indicate that it would be very quick to slip down to 2001 and refill that poorly auctioned area. The entire profile yesterday from 2001 up was poorly auctioned. It was a one-way auction, and the reason I say it's poorly auctioned is because it's more it is a much more firm test when the auction oscillates back and forth. So when you have an auction that pushes up, pulls back, pushes up, pulls back, pushes up, pulls back. This is an auction that is two-way. It's completing its rotations. An auction that pushes up, chops, pushes up, chops, pushes up is a one-way auction. We still don't know what kind of participation we would have gotten on the short side. And so it creates a weak structure, so to speak. And that's what we had yesterday. Little pullbacks worth about 1.5 points. Very tiny pullbacks yesterday. So if you were short yesterday, it moved in such a way that you thought, I'll give it more room. 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 Crap. Boom. And you're out because you have a margin call or you have a margin issue. Again, like I said, it was a tough day for day traders. Why? Because there was an OTF presence here, which we spend a lot of our effort looking to detect and stay out of their way. The fact that it did not fill the gap, did not have any responsive selling on a gap up in range, is a huge indication, and I pointed that out. I don't know if I think I tweeted out caution shorts. I don't remember if I tweeted it out or I put it in the S5 chat room. But the fact that it was not able to rotate down and it started to drift up and the rotations down were very poor, that was a shot across the bow, because generally we want to balance, the market wants to balance its inventory overnight and retest the most recent close or the most recent point of control before it continues higher, because that's the representation, that's the most recent representation of value. That's the summary of yesterday. So based on what we saw overnight with this balanced profile, there's not much we can do here but expect this to continue higher into the session. There's no indication otherwise, and if there's no indication otherwise, the trend is your friend, and we need to look out for a continuation higher. Now, what we've accomplished yesterday is we have gone into the August 20th profile. So let's go back to August 20th here. We filled in the gap that existed between the 20th and the 21st, and we are trading right in here at 18.25 right now. And so we are inside of here, and to me it seems like it's open to continue drifting up till about 2030, 2029, before it gets into the thick end of this profile. And remember, I said the other day, I think it was 2 days ago, I said that once we take out the gap and start to drift and hold, if we take out the gap and then retest and continue higher, then our target becomes 2043.75, and we're back into buy mode. So we're in the process now of canceling out what happened at the end of August, that shock that came in at the end of August. So this is our template day, 8/20 is the day we're templating today, as long as we hold above 15.25. The gap that was here has been filled, and the market's just sitting sideways. The 16 quarters you see here was the close of this day. That was the closing print, 16 quarter, and it represents our point of control from yesterday. There's a lot that traded at the 16 quarter yesterday afternoon. So I'm out of time, but the primary hypothesis for this morning is for it to continue to drift higher with a fair amount of chop. And the reason there's a fair amount of chop is option expiration today, plus it's a Friday into the weekend. Not expecting anything too aggressive to come in, but all indications are we've broken out of the micro composite, the balance zone, to the upside, so we expect an upward drift. The better trade idea is, of course, for it to test up, finish this auction from yesterday, which is an incomplete auction due to the pit close. Finish this auction yesterday, chop around, and then start to work itself back to 2000, where this whole thing initiated, base, and now you've got something that's more substantive to head up to that 2048 area. Okay, I'll leave you with that thought. It's Friday, as always. Friday. Not a good day to sit on losers. Not a good day to get very aggressive. Not a good day to be impatient. Friday is a good day to just chill and wait for the market to pick a direction, and to trade from that direction, and lean on something using whatever it is you use, some moving averages or whatever, trend lines and so on. That's the idea, is to form a bias, wait for the market to confirm or deny that bias, and then to find a trade going in the direction of the bias, the most recent bias you've determined for your time frame. And I emphasize for your time frame. That's why seeing someone commenting on Twitter about, oh, the shorts are taking over, or whatever, the first question that should come to mind is, what is this person's time frame? Because if their time frame conflicts with yours, if their time frame conflicts with yours, you're going to experience a lot of confusion. You're going to lose track, and you're going to lose your plan. So when someone's commenting on the market, you always want to know that person enough to understand what their trading time frame is, because that's what dictates their analysis. Okay, I'll leave you with that. Good luck today, and I'll catch you on Monday. Take care.